Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be having a look at another method to ascertain what price Bitcoin can reach at the end of this bull market. As we've just seen, we're coming up to critical levels to see whether Bitcoin can break through and retest the all-time highs at 73,000. And a lot of people are asking, if we break through, what price can we reach? Last week, I showed you a particular figure based on a different method. And this week, I'm going to use a completely different method to ascertain a different price based on what's happened in the charts previously. And as per usual, I'll have a look at the wider markets and see how they fit in with Bitcoin, and I'll also have a look at the 60-day cycle to see exactly what's happening in the short term going forward. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, we're going to begin with the main theme of this video, and that is to look at some price targets for the end of this bull market. In last week's video, I covered this incredibly accurate Bitcoin chart, which gave us a price target up here of around about $350,000. And if you haven't watched this video, it gives you a very detailed account of how I came to this figure based on the historical charts. So if you want the details of that method that I used last week, please go and watch that video. And today what I'm going to do is I'm going to use a completely different method which I haven't used before, and it's called the trend-based Fibonacci extension here. So what you do here is that you take it from the bottom of the market, which is here, to the first top, the first peak, and then the bottom of the bear market. And what you get there, we got the top of the market at precisely at the 78.6 Fibonacci level. So remember that, 78.6. Then the second cycle, which ended here in 2017. So once again, you take it from the bottom of the bear market here to the top of that cycle, and then back to the bear market that followed. And this time what we've got is a figure which was at 20,000, right in the middle of the 78.6 and the 61.8. So the first cycle here was at the 78.6, and the second figure here is in between the 61.8 and 78.6. Then if you take the third cycle, which was the last cycle that topped out at 69,000 in November 2021, once again from the bottom of the previous bear market here to the top of the cycle at 20,000 and back to the bottom of the bear market, once again what we find, that we actually topped out at 69,000 here at precisely the 61.8. So in the last three cycles, the first one we topped out at the 78.6, the second one in between the 61.8 and 78.6, and this one was at exactly the 61.8. The exact figure for 61.8 was 60,900, and obviously we topped out a little bit higher than that at 69,000, and the first top was at 64,000. What we're really working out is some ballpark figures to give us some sort of an idea of where we're heading here. So if we do a close-up of this particular cycle that we're in now, we take the measure from the previous bear market down here to the top before the bear market, which was at 64,000, and to the bottom of the bear market here. And what that does is it gives us a much more of a conservative figure for the end of this bull market. So last week, when we had a look at the previous cycles, and the method we used there gave a figure of around about the 350. Well, here we've got a completely different picture, and this is why it's very difficult to predict anything. And this is why I don't want to get involved in giving predictions, but just based on the facts in the charts, using different methods, everybody can make up their own mind, come to your own conclusions of where we're heading around here. So in this particular picture now, as we've seen, the first cycle would have given this figure here, which is at 167,000. The second cycle was right in the middle, which is around about 130,000 here. The last cycle came to the 61.8. And this is giving us a figure here now of $100,000. Now, those of you with a keen eye will have noticed something, that we've been going from the 78.6 to the halfway mark to the 61.8. So maybe this cycle, we may be going a little bit less than that. So if you want to use a halfway mark between the 61.8 and the 1.0, well, that would give you a figure of around about 85,000. And at the end of the day, nobody has a crystal ball. What we have is a series of different techniques and different methods to give us different results and different outcomes in terms of the price at the end of the bull market. So the main thing is to remain open, fluid and flexible. And we have our Bexit indicators. If you've been watching my channel, I have about 5 or 6 very strong indicators which will give us some sort of a sign, some signal of when we will get to the top of the bull market. Whether that's at 350 or whether it's at 167 at the 78.6 or any of these levels here. So you can see that using different methods, we can come to different conclusions, and this method here is giving us around about 85,000. So the range we're really looking at here is between 85,000, which is the halfway mark here, to anywhere around the 350,000 mark, and many people are predicting about 500,000. Well, we can believe that when we get there. So I thought this was a very interesting exercise to look at another different method to see what that method, based on the charts one more time, just like it was last week, but we're coming to a different conclusion this week. And because Bitcoin is coming up to a very critical level at around about the 69,000, and we'll have a look at the possibilities and the probabilities of it actually breaking through this time. There are many analysts giving predictions as to what the price may be. And if we move on to the news, you can see here that some people are forecasting Bitcoin to get to $233,000. Now that there is a possibility of Bitcoin breaking through the previous all-time high at 73,800, you'll see a lot of figures being branded about. And this is one of the reasons why I wanted to cover it, just to show you from the facts in the charts only, not from somebody's predictions based on hunch and feeling and emotion, but just based on the charts, we're getting different types of figures. And if we move on to the liquidation heat map, this is always giving us a very accurate picture of the range between which Bitcoin seems to be operating. And currently what we've got is these yellow zones, which is really what we need to pay attention to, because this is where the majority of the stops are, the stop losses for the upside and the downside. So the leverage players who are bullish will have their stops down here at exactly 68,000. And we do have another zone here at around about 68,400, which is about the price where we're at currently as I'm doing this video. And the bearish leverage players have got their stops at exactly 70,100. So in all probability, Bitcoin's going to come and take these stops out within these ranges, as we've seen previously. And if we move on to the ETF overview, this is giving us the asset inflows and outflows for Bitcoin within these exchange traded funds. And for the first time since I've been showing you this, we've now got a full board, which is all green here. In the past, you always saw that the Grayscale Trust was usually always in the red here and with a very big figure, and some of the other ones were as well. But what we're really getting is an incredible amount of buying going on in the ETFs. If you look at the number one ETF, which is the BlackRock Trust here, you can see the amounts that are going through are incredible, 16,974 Bitcoins. And in Grayscale, instead of bleeding, it's actually now in the positive territory, just under 1,000 going in there, despite the high fees. And if you look at ARK, 4,100 Bitcoins. So there are some really nice figures going in, which will be reflected in the price. 2,000 here, 1,000 here, etc. So an incredible amount of buying going on, which may be a great signal that we may be about to break through and test their all-time highs at 73,000. We'll move on to the dollar, because the dollar has an inverse relationship to the wider markets, but something rare is taking place at the moment. So while the dollar is having a counter trend rally up here after a very big fall over the last many months, so this was a counter trend rally that was really quite well expected. And you can see that the measure that we've got over here, when you do the Fibonacci retracement from the top here to the bottom, we can see that the dollar has come up to the 61.8. It's come just shy of 104. Now if you look at the RSI, you can see there may well be a little bit more to go here. So I've marked out the 78.6, which is at around about the 104.8 level. So either we're going to get rejected here, and as we can see, as the dollar came up to the 61.8, it had a rejection here, leaving a nice wick at the top here. So this may well be a rejection at this point, or if we do have another leg, there'll be a rejection more than likely at the 104.8 level. However, when we move to the daily time frame, we're getting more of a probability that we're going to get rejected at this point here at the 61.8, because on the daily chart, we're looking quite well overbought here, as well as we've now got an outside bar bearish candle at the top of this trend here. So these are now giving us some reversal signs to the downside. And of course, it can still go up to the 78.6. But what I'm trying to say is that there are now reversal signs developing at the 61.8. And the higher probability is that we're going to get a rejection here and a pullback. The bigger picture that I see with the dollar is that wherever we get rejected, here or here, the bigger picture is that we are making lower highs all the way from these levels here at 115, and this is just another lower high here, and the trajectory in the long term is to the downside. So we may have another period of time, maybe one more year, for this to come back down to these levels at around about the 95 to 97 level, and that should allow the wider markets to have a big run towards the upside in a bull market fashion. And if we move on to the SPX, we can see quite clearly we've broken out from these very strong resistance levels. Having broken out, we've come back and retested them as support, and we've gone again on another leg. This is the end of the current 60-day cycle here on the 29th of October. So we've still got another week. But as we know, we normally have an end of the cycle pullback. So whether it's going to be from where we are currently to either the previous support line, which was resistance before, so we could use that as a support before into the next cycle, we go into another leg of the bull market. So it's all looking very rosy at the moment for the SPX, but I do expect some sort of a pullback into the 60-day cycle low to start a new cycle one more time. So there are no signs in the SPX that would suggest that we have actually topped out or about to top out. And if we move on to the metals, and if we move on to gold, we're seeing some incredibly bullish signs here. And what we've got is a breakout at this point that we got back in March this year. And since then, it's just been a series of higher highs and higher lows. We did have some sort of a consolidation over here for a few months, but that was again a consolidation and a continuation of the pattern to the upside. And we can see that in the previous 9 months here, we've had only one red candle. So this looks to me as though it may well be in the short term overdone, overbought. And we can see with the RSI is showing signs of being overbought as well as the stochastic RSI. So we may well get some sort of a pullback to realign the indicators and then to have one more go at the blow off top. So fantastic run for gold, and there's no reason to suggest that we've topped out or about to top off. Until we see those signs, we have to accept that we may well just have a little bit of a pullback before we go again for the next leg. And something very interesting happening on the silver, because while the gold has been powering ahead, the silver has been a little bit subdued at its previous highs here. But now, suddenly this month, we've got the breakthrough that we really needed and wanted. So this is really telling us that this one is really following gold. So while gold has a little bit of a pullback and a little bit of a correction, this may now actually power ahead and catch up over the next few months. And moving on to our 60-day cycle, what we can see is some very interesting developments. And that is that if we go back to the 73,800 all-time high that we got here, in terms of these cycles, these are really proving their worth, because when we look at Bitcoin through the framework of these 60-day cycles, it gives us a lot of clue, a lot of information to elicit from here in terms of where this may well be heading. Because when you go back to this point here, because the cycle that followed the all-time high, which was this one here, this was our midpoint, and so when we came up to the midpoint here, we failed to make a new high after the midpoint, so we got a left translated cycle here. That was giving us a danger sign that this may well not be what we're expecting it to be at that point. So the euphoria that we got with the ETFs rising up here, the 60-day cycles were giving us a contra-indication of something different happening. And in the following cycle after this one, which was between this red line and this red line, once again, from the bottom of that cycle, we ran up to the midpoint here. But once again, after the midpoint, we failed to make a new high. So we got another left translated cycle here. Then in the third cycle after the all-time high, which is between this red line and this red line, the midpoint, once again, we got the Bitcoin price rising from the bottom of that start at the day 65. But once again, after the midpoint, we failed to come back up to those levels and go above it. So once again, we've got another left translated cycle. So these cycles are very good in explaining why we are where we are, because in each of these 60-day cycles that we've had previously, all three of them have actually been left translated cycles. So in that framework, when you're looking for a reversal, the first sign we need to see is that, are we getting a right translated cycle? And this is exactly what we've just got here. So in this current cycle, which started on day 63 from the previous cycle here, as expected, the market went up towards to the midpoint of the cycle. Then we had the normal mid-cycle pullback. And then what we've done is we've created a double bottom around that midpoint. And now we've gone above the high of the cycle before the midpoint. So this is now a right translated cycle, the first one that we've got since the all-time high here. So please remember, you don't use one indicator to give us a definitive idea of what's going to happen. What we do is we look at little signs, and this is quite a big sign that we may well have now reversed back to the upside. So even if we don't break through the 73,000 within this current cycle, which comes to the end on the 5th of November, but the signs here that we're now making a right translated cycle, as well as a higher high, as well as a higher low on this side. So the trajectory and the pattern of the charts are now moving to the upside rather than to the downside that we got here. These are the tentative signs that we have to look for to see whether the Bitcoin price has started to turn around. And what we're doing currently, if you look at it from here, we've made the lower highs along the way, and certainly the current one is another lower high. So we haven't actually broken through this trend line. What we've really got here is that we're coming up to a very critical juncture, and Bitcoin now has to make up its mind whether it wants to retest the 73,000 here and then go again, or we're going to get some sort of rejection where we are now. If we do get through, expect some sort of rejection at the 73,000 initially anyway, but if it really wants to go, after the initial rejection, we should see a big move to the upside and break through this 73,000 barrier. The good advantage that Bitcoin has at the moment with the current price action, which gives us an insight that this may well actually break through the 69,000, which is where we are currently, topping out at around about 69. The good thing is that from the start of the cycle here, today is day 45. So we're on day 45 of the current cycle. And we know that these cycles run all the way around about the average of about 60 days. So while we can have early cycles like we had here, day 42. So on day 45, our expectation should still be that we've got another 15 more days for this to run. If this was coming up to the 60-day cycle at 69, then you would expect with a higher probability for it to get rejected here. But the fact that we've got 15 more days gives us a bit more of a probability that we've got a good opportunity now for it to run all the way up and retest that 73. Whether it does that, nobody knows, but certainly the cycles would suggest that we've got a little bit of wriggle room for it to run a little bit further up over the coming 2 weeks. And a lot of people always ask about what the strategy should be at this point. If you feel that this is going to get rejected here, well, this is your opportunity to get out and take something off the table, because there's no point doing it when it's down here. Because what tends to happen is that people are hoping that the price will go up from here, and then they ride it all the way down here, and then they get frightened, and out of fear, they lose out their positions down here at a very low price. So if your conviction is that we've now topped out at the 69,000, then this would be the ideal time to take some profits off the table. But I can only share my own thoughts and my own strategy, and that is that I'm very happy to ride all these ups and downs, because at no point does anybody know whether this is really going to go shooting up or not. And since Bitcoin only has around about 20 big days in a whole year, I'm not prepared to miss those days. So I'm quite happy to ride these down, because my purpose within this market is to reach to the end of the bull market and to capture the whole of that cycle. And the only way to do that is to ride out the oscillations along the way. So what we should really expect here is that if we do have a little bit of a rejection at this point and have an early cycle, this would be an ideal place for it to come back and bounce from. So this would give us a very good signal that in the next cycle, having now consolidated more in the upper 1/3 of this move here, Bitcoin is giving itself an incredibly good opportunity for it to now break through in the coming cycle after the 5th of November. Unless it doesn't do that already, because we've got, as I say, with these cycles, we've still got another 2 more weeks to run. So Bitcoin does have an opportunity to run up now and retest that 73,000. So those of you who've been following our channel will know that we got in 2 lots here at the 17,000 the first time it came down to those levels, and then at the 15,000. And our investment here at Wisdom Bites is all in the Bitcoin miners. And as I mentioned many times, I don't have any Bitcoins whatsoever. In this cycle, I'm just playing the leverage play with the Bitcoin miners. And ever since we got in here, we've been riding all these oscillations up and down all the way along here to where we are currently. So we've not been shaken out by these big oscillations that you get normally. So the whole purpose of that was to really capture the whole of this move here, from where we were at the end of 2022 to where we think the end of the bull market will be, anywhere around 2025, but more likely towards the end of 2025 here. Because that's what's happened in the past. We always seem to top out more towards the end of the 4-year cycle. So this was in November, this was in December, and this was in November again. So what we have to capture the rest of this bull market. And that's assuming that we are still in a bull market. As many people question, have we topped out? And that is definitely a possibility, and it's always on the table. We can never discount anything like that. So if 73,000 was the top, we haven't yet got the definitive signals which we've been looking at under the Brexit indicators. None of them are really saying that we've really topped out here. And what we really need is a confluence of many of those indicators. And the problem with getting a top is that sometimes you won't know what the top is until the market has really topped out and come back down quite a bit. And this is where people can get caught out. So this is where really we're hoping that the Brexit indicators can give us a very good strong clue as to when to get out as near the top as possible. So the Bitcoin miners that we actually got into around these levels here are much more volatile in the sense that when the Bitcoin price goes up, the Bitcoin miners go up in a leverage play, and when the Bitcoin price comes down, they also come down on a leverage play, i.e. 2 or 3 times more than Bitcoin on the up and the down. So what we've seen here is that when Bitcoin bottomed out on the 10th of October, that was only 11 days ago. So in the 11 days, Bitcoin has actually gone up from the bottom there at 58,000 to the current price at 68,400 as I'm making this video. Bitcoin has gone up by 16%. And if you compare that with the Bitcoin miners, and I'm using CleanSpark as representing the Bitcoin miners here, once again, it also bottomed out on the 10th of October, just like Bitcoin. As Bitcoin's come up by 16% from this point, you can see CleanSpark, representing the Bitcoin miners, on Friday's close, has gone up by 50%. So that's a 3x leverage just in the space of 11 days. But as you can see quite clearly from here, when the Bitcoin miners fall, like this fall from here, when it reached $20, the recent pullback has been over 60%, while Bitcoin came down by 30%. So the Bitcoin miners are really an incredibly volatile play, but they are a leverage play on the Bitcoin price. But as long as we believe that we're in a bull market, then when Bitcoin does double up and treble up or whatever it does in the coming parabolic move, then we can see quite clearly with the Bitcoin miners, they're going to do a lot more. So for those of you who've been following our portfolio here, our portfolio has been changing quite rapidly over the last couple of weeks. So we started this portfolio, like I said, at the bottom of the bear market back at the end of 2022, and we started this portfolio here on the 6th of January with around about the $100,000. And at the end of 2023, a year later, that had grown to $434,000. And we've used that money as a trading portfolio here. And in the trading portfolio, what we've been doing is what we call ratio trades, which is basically moving between one miner and the other whenever the ratio charts between those miners give us that opportunity to do so. By doing that since January this year, we've managed to increase the trading portfolio further by 19%. So this 100,000 that we started off with is now currently at $519,025. So this was on Friday's close. So these are updated until Friday. And as a control to that, to see what would happen if we didn't do any trading whatsoever and just had a passive portfolio with that amount of money that we had at the end of 2023, which was $434,989, that is only just 1% down, while the Bitcoin miners have recently had a fall of just over 60%. So obviously they've risen recently, but this passive portfolio has really stood the test of time. It's only at minus 1%, and that's at 431,000. So we're basically back at the end of 2023 where we had this amount of money. And our target for the end of this bull market is $5 million, both for the passive portfolio as well as for the trading portfolio. So we're expecting with the Bitcoin miners to be a 10x. Obviously nobody knows if it's going to be that, but we're very open, fluid and flexible that even if it gives us a 9x or a 5x or a 3x, whatever it is, once the exit indicators give us the signals, we'll be out of the market. But from current levels here, we would need a 10x to get to our target of $5 million. Please remember, this is an incredibly volatile area and many members have joined and found it very difficult with the volatilities. So if you would find it difficult with the volatility of riding the portfolio up and down in large amounts, then this is really not for you. But if you can withstand that emotion and can manage that, and you want to join us in the private member section where we cover the Bitcoin miners with 2 videos dedicated to the Bitcoin miners on the Wednesday and the Friday, where we run the ratio trades in the portfolio, all you have to do is click the join button below any one of my videos here, or in the description box, you've got a Bitcoin miners membership join link here with the red button. The cost of the membership is at £12.99. That's less than a coffee per week. If you want to take part on the leverage play for the rest of the bull market, and if you think it's worth more than a cup of coffee a week to you, so you can join us here at the private Bitcoin miners section. So you'll find everything is under the membership tab here, and every day at the end of the trading session, we do a market update to bring everybody up to date with what's happened with Bitcoin, with the Bitcoin miners, how they're performing, any articles that's relevant and important in relation to the Bitcoin miners, and all the membership videos are on here as well. And we also leave a lot of charts to show us exactly where we are if there are any opportunities for ratio trading. And the majority of the members in the private section are actually passive portfolio holders. So obviously you don't have to do the ratio trading. That's just for those people who are looking for a little bit of spice, a little bit of dynamism for their portfolio in the safest possible way. And the ratio trades are very different to your normal swing trading because you're just moving from one miner to the other. You're not actually putting money to the side waiting for the pullbacks like you normally would do in a swing trade. And that makes it far safer to trade in ratio trading. Okay, so we're going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. If you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.